Hello and welcome to the Armstrong Risk Report. We will inform and educate you on critical risk and insurance issues facing your business. Our host, Jason Blanz, will bring you weekly updates on how to manage your risk. Today's topic focuses on hidden risks in contracts. Now, let's turn it over to Jason.
Welcome to the Armstrong Risk Report. I'm Jason Blanz. If you own a business, you sign contracts all the time. Vendor agreements, office leases, client service contracts. Most of the time, we're looking at the scope of work or the payment terms. But buried in the fine print is language that can completely void your insurance coverage when you need it most. Today, we're walking through the 5 hidden contract landmines that trip up business owners every single day. Let's get into it. Number 1, additional insured requirements you never fulfilled. Here's the trap. You sign a contract where the other party requires you to name them as an additional insured on your policy. You sign it, file the paperwork, and forget about it. But you never actually call your broker to update the policy. If a claim comes in, your carrier sees that the third party isn't listed and denies the claim. Now, you're in breach of contract and facing a massive legal bill. The fix? Make it a rule. Before you sign, send every insurance clause to your broker for a quick green light. Number 2, broad indemnification clauses. These are the hold harmless clauses that quietly transfer the other party's mistakes onto your books. The problem? Your general liability policy likely has a contractual liability exclusion. This means your insurer won't cover losses you voluntarily assumed in a contract. The fix? Negotiate for limited or mutual language. It's a simple change that keeps you from paying for someone else's negligence. Number 3, work that changes your risk profile. Your policy was written based on what your business looked like on the day you bought it. If a new contractor has you doing something materially different, like handling hazardous goods or working in a new state, your operations no longer match your policy. If a loss happens in that gap, the carrier can say that the risk was never disclosed. The pro tip? A 5-minute call to your broker whenever you take on a new type of project protects everything you've built. Number 4, the waiver of subrogation. This sounds like legal jargon, but it's a big deal. It means you're agreeing that if your insurer pays a claim, they can't go after the actual person responsible to get their money back. Many standard policies forbid you from signing this without permission. If you sign it without a blanket waiver endorsement, your insurer could deny your claim entirely. And finally, number 5, your coverage limits are just too low. Big clients or commercial landlords require $2, $5, or even $10 million in coverage. Many owners assume their current policy qualifies, only to find out during a claim that they are short and personally on the hook for the difference. The solution? Pull out your declarations page and compare it line by line. Often a commercial umbrella policy can close the gap for a fraction of what you pay out of pocket. To recap, unfulfilled requirements, broad language, undisclosed changes, unauthorized waivers, and low limits. These are the 5 ways your contracts can sink your insurance. None of this is inevitable. Every single one of these risks is preventable with a simple pre-signing review. Don't sign away your protections. If this was helpful, hit subscribe. We're here every week to help you manage risk and protect your bottom line. And if you want our contract insurance checklist to use for your next signing, drop a comment, or reach out to us at Armstrong Insurance Consultants. Thanks for joining me on the Armstrong Risk Report. I'm Jason Blanz. We'll see you next time.